Today we got the news that the Fed has decided to cut interest rates again. However, the market has taken a tumble as there's a lot of uncertainty as to whether this trend is going to continue in 2025. And that is especially affecting companies like SoFi, who are very dependent on interest rates. So today we're going to discuss this decision from the Fed, as well as their outlook on cuts in 2025, and ultimately the effect all of this can have on SoFi's business. And as always, if you enjoy this video, make sure to drop a like down below and subscribe for more videos like this one. Before we jump into the video, let's take a look at the YouTube portfolio. It's currently sitting at a value of $57,355.11. And today alone, we lost around 2% of the portfolio, which equated to $1,270.78. Overall, every position in the portfolio was in the red today. On a percentage basis, our largest losers were PayPal and SoFi, which makes a lot of sense because these two companies are a little bit more dependent on interest rates. Even our two dividend ETFs were down today, down around 2.3% for both of them. We're still up overall on all of our positions across the portfolio, and we're sitting on a decent amount of cash. So if this trend continues in the market and it continues to drop, we have plenty of cash to redeploy into the market. And one company we could look to add additional shares into is SoFi Technologies. Here today, it was hit very hard as we previously discussed. The stock on the day was down 8.5%. However, from its highs of the day to its lows of the day, the stock actually fell by over 12%. And this drop far outpaced the rest of the market. The S&P 500 was down around 3% today. And there's a couple of reasons why SoFi fell much more than the broader market. One of those being valuation. Currently, SoFi has a forward P ratio of 83.33. This is far above the broader market, and oftentimes when investors get scared that the market is going to drop, they start taking some of the risk off the table. And SoFi, being a newly profitable company, is seen as being a little bit more risky, so it's obvious that investors are going to pull some of the money out of these more speculative investments like SoFi. The second reason that SoFi fell so much today has to do with their dependence on interest rates and comments made by Jerome Powell. Yes, we did see the Fed reduce interest rates by 0.25% today, taking rates down from 4.75% to 4.5%. However, Jerome Powell made the following statements: "We expect significant policy changes. We need to see what they are and what effects they have. We will have a much clearer picture once that happens." What Jerome Powell is specifically talking about here is this man, Donald J. Trump. When Donald Trump comes into office, there's a very high likelihood that he will implement tariffs against a number of different countries. What that could ultimately lead to is a tick up in inflation due to prices increasing for consumers. And this concern makes a lot of sense when you look at the things that are included in the consumer price index. There are things like food, energy, you also have apparel. A lot of apparel is made in Southeast Asia, and obviously China has been a big target for tariffs, and that could easily spill over to some of the other countries in Southeast Asia that produce a lot of the clothing that is exported to the US. We also have other things like new vehicles. Vehicles and a lot of their parts are produced overseas, and bringing those into the US could cost more money. So it makes a lot of sense that the Fed would look at some of these policy changes and think that they may want to stop their cuts of interest rates to potentially reverse any negative effects that those could have on inflation. And we can see through the Fed's dot plot how their strategy has changed over the last couple of months. During their September meeting, they were projecting that interest rates by the end of 2025 would be somewhere between 3 and 3.5%. However, now in December, they're projecting that 2025 interest rates will only reach 3.75%. One positive is that the Fed over the long term is still expecting rates to get down to around the same level. They're expecting by 2026, 2027, and over the long run that rates will really get down from anywhere between 2.75% all the way up to 3.25%. And what we saw from the market today is investors trying to price in this new strategy from the Fed. And this is especially true when it comes to companies like SoFi that are very dependent on interest rates. When we look at the products that SoFi offers, personal loans, private student loans, mortgages, student loan refinancing, these are all things that are very dependent on interest rates. If interest rates drop by a significant amount, there are a number of people who have gotten loans over the past couple of years at very high interest rates who could look to use SoFi to refinance. And that's why a lot of of investors were running this stock up so much because they were anticipating a very large drop in interest rates in 2025. With that being pulled back, investors are now having to reprice in what this stock is actually worth. And you can see the opposite effect of this in SoFi's numbers on Yahoo Finance. Analysts over the last few months have taken their EPS projections from 20 cents up to 24 cents for 2025. So we could actually see a reversal of this trend because of this change from the Fed. We could see a lot of these analysts actually start dropping their EPS projections for 2025 back down to maybe the 20-cent range. Does a 4-cent drop in EPS numbers justify an 8.5% drop in the stock price? Probably not. Obviously, investors could be looking at different things. They could actually be pricing in a larger drop in EPS numbers and EPS estimates in 2025. That is always a possibility, but also you have to consider the fact that people are not rational. They're going to see a stock falling and oftentimes start selling on their own, and that can lead to stocks falling more than their intrinsic value, and that's what presents good buying opportunities. But in my opinion, right now, SoFi is still not yet a buy. I've been taking the same position that I talked about a couple weeks ago, where I've been selling covered calls at the $17.50 strike. And what that has ultimately led to is I've collected around $40 in premium in just the last couple of weeks. That's additional money in my portfolio, and I plan to continue that, especially if we see a small spike up in the stock in the next couple of days. I could see me selling another covered call somewhere around the $17, maybe $17.50 again, depending on the premiums that are being offered. But as I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below and subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. And for the joke of the day, which of Santa's reindeer has bad manners? Check the comments down below for the answer. Thanks for watching.